going on, everybody? Testing 1, 2, 3. Welcome to All Stock Trades, everybody. All right, let me go ahead and see. Testing 1, 2, 3. Welcome to All Stock Trades, everybody. All right, let me go ahead and see. Looky, we have a microphone problem, as I can see here. Sounds like I'm in the bathroom, huh? Let's see if we can fix this bad boy. Hold on, guys. Hold on. Don't save. Let me. Should be good now. Motif. Hello. Motif is in line. All right. Okay. So then now, let's end the screen. Okay. So unfortunately, the software I was using updated, which caused the whole thing to look all weird. So now we are good. So my apologies, guys. A little bit of technical difficulties. It's just a little software upgrade that they did. So we're all good now, right? So let me go ahead and let me check. Oh my God, dude. Yeah, I don't know why I was listening to myself. I was like, man, this microphone sucks. What the hell's going on? Yeah, it looks like I borrowed Peter's mic, right? All right. Dang, guys. Wow, it took too long. All right, sorry about that. All right, so we're back in business. All right, so let's go ahead and yeah, and I'm sorry I'm sorry that this happened in this live because this is a really important live. This is a really damn important live, okay? So we might have to do some editing on this video. See if we can do post edits. All right, so first off, how's everyone doing? Yoel, your favorite nephrologist from Canada, thanks for the LinkedIn connection. Early CKD detection works. Counterpart is needed to save lives. Hey, what's going up? MD man, what's going on? We have Mr. Reverse Stock Split Man here. He thinks that the stock is going to go to $1, so that's awesome. All right, so I'm about to show you some data that you're going to pretty much be like, what's going on? So we're going to talk about the short data. We're going to talk about this downgrade from Schwab, but interestingly enough, they're buying the stock in the background. We'll talk about the mechanics of their paper. We'll talk about what Andrew Torrey tweeted today and the significance of it. We're going to talk about the short interest in a. We'll bring this to the beginning, and we'll talk about the upward channel breaking down below what we thought would be the channel here on the 50. Now it's actually here. So I like to change it in front of you guys so you know I'm not bullshitting you, right? So it broke out of our channel. So what we're going to do now is, and I said it could potentially break down here. So I said we got to find the bottom here. So now that we found it, it may seem, and this doesn't seem like it was believable, but this looks like 2 bars here. This looks somewhat believable. So it may seem as we may have found the channel here. Now, again, we could break down from this, but this is from the 30-minute. The day, this is how it looks like on the day. It's a bit difficult. We need more data points on the daily, but it looks like this may be the channel we were looking for. Again, we don't know. It did fill in this gap. There's a gap down here, but we'll see. I mean, it is just a 30-minute, so it's not that much of the gap. But yeah, so we will talk about that. We just did a little bit right now. We'll talk about the value-based care. This will coincide with Andrew's tweet, and then we'll talk about healthcare in general, and then yeah. So first things first, I went ahead and sent out this paper today. Surprisingly, only 700 views, not a lot. I did clean up Twitter a little bit. I did unfollow a lot of people. I cleaned it up. There are some people, I don't know why I was following them. This was like an old Twitter from like 2017. So there's a lot of folks I cleaned up, and I'm probably going to clean out more and just delete a bunch of folks. But maybe that's why. Maybe maybe the Twitter's kind of disrupted. But the big thing here, guys, is there's a lot of stuff here that you should read. For folks that don't know, you can follow me here. The big thing here, guys, this is pretty important. Short interest for Clover is at 12.13%. 3 months ago, it was at 3%. Okay. And by the way, this is data is reference here. It's from Ortex, and I'm going to show you the data right now. But I just kind of put it here so it's easier for folks to read. If you look at the short interest in terms of shares, we're at 47.62 million. 3 months ago, it was at 12 million. It's up 296%. Utilization, which is quite interesting, spiked from 36.77% all the way, used to be 2.69%. So it spiked up, and it spiked up 1,267%. So the short score increased by 126% to about 69.34, and used to be 30. So the reason why I say this is, again, guys, I have a threshold for talking about something, right? I'm a long-term investor. I don't like to talk about this short crap. But again, Carvana, there was a time where, hold on, man. My dog thinks he's a dragon. Hold on. Can you calm down, please, buddy? All right, good boy. Calm down. You're not a dragon. You're a dog. He's like, I'm a dragon. All right. So there was a short squeeze element to Carvana running up 3,000%. Likewise, HIMS also had a short squeeze element when it jumped up from 16 up to 4, up past 60, and then it basically dropped again here and it went up. So there is some short squeeze elements we'll be talking about, and we'll basically paint the picture. But let's go ahead and go straight to the business here. So if we open up Clove right now, utilizing Ortex data, let's see. I don't know what's going on here. Let's see. That's weird. Huh. Okay. Yeah, guys, I think we're stumbling onto something. This is a bit interesting. Um, this is a pretty interesting here, guys. So where do we begin? If we go ahead and look at the official report and open up this range here, there's a lot of garbage, right? And what I like to do is I like to clean up the garbage. If we clean up the garbage and if we can look up the stock price, I want us to just focus on something right now. I want us to just to look at the Ortex. Well, first off, just look at the exchange short interest. Then I want us to zoom out. Okay. Now, if we go ahead and look at the zoom out section here, what do you see? Okay. Look at the stock price, right? It went ahead and it bamboozled its way up to $28 and somewhat cents, $28.85. And yet the estimated short interest was around 41 million, right? That's when it basically spiked up. But then the percent at which it went up in terms of the short interest wasn't 12%. It was anywhere it started between 30 to 45%. We're currently at 12%, but I find it interesting that the exchange report short interest is 42 million. So if you look at the data, this is the most current data that we have right now. This is the stock price. It's currently at $3, which you can see here. It went up all the way to the top, and it's getting to a point where it's starting to cycle in at a moment where stock price was heavily suppressed. So what I find interesting is if you look at the data here, this side of the data doesn't make sense. This side here is garbage, right? This side here, this is all garbage, right? Why is it all garbage? Well, if you utilize the fundamental analysis data that we have, Clover was negative free cash flow, negative net income. From a fundamental perspective, there was no reason for the stock price to go up, right? The only thing that was showcasing a potential for the stock to essentially rise was the medical cost ratio going down for Medicare Advantage. Now, what I find interesting is if you look at the short interest here, it pretty much went from 21 million all the way up to 48 million. And that's when the stock price hovered around 60 cents. That's when the stock price was 60 cents, right? So it was right here, 60 cents. And then as the earnings came out for Q1, right? Clover announced that it would be doing a share buyback. And then it went ahead and it announced that. So then that caused the price to go up. And then other things happen as well. Vivek bought $1 million worth of shares. So as Vivek did that, the short interest started dropping. Again, still somewhat stabilized, still elevated, but it dropped significantly. But then Clover on its August 5th, which you can see right here, right? Let me just zoom out. So August 5th, which is right there. Clover, and I can just kind of show you here, right there, right? It's a little bit easier without having the bubbles come up. Clover went ahead and they went ahead and announced that their Q2 2025 profitability. And as soon as that happened, the stock price went up a lot. Likewise, you got Vivek buying again at $1.80. So the stock price just basically exploded. And it went to like $4.80 something cents. And then you could see short volume, short interest in the millions, not volume, interest, went down. It went down. And then now we're starting to see it spike. Now, again, this type of spike is not normal. This is not a normal spike, guys. This is a pretty large spike. And again, who is shorting Clover? There are some retail investors shorting Clover, right? It's bound to happen. You are going to have some. You can look at there are going to be some retail go back to the discussion I talked to you guys about before, right? Right. There's going to be smart hedge funds and dumb hedge funds. There's going to be smart retail investors and dumb retail investors. Okay. That's just life, right? You are going to have some dumb idiots, regardless if they're institutions or not, shorting this stock. Because what ends up happening is they're gonna go to their Bloomberg terminal, right? And what they're gonna do is they're just gonna look at analyst estimates, right? And they're gonna look at quarterly estimates, and then they're gonna look at EPS, which is in the high range. You can say, okay, what could the highest this could be? And we could zoom in here so we could kind of get a better grasp here, right? A little bit of zoom in here. And then you could look at, let's say what they're going to do is they're going to say, okay, well, what's the next quarter Q2 earnings for Clover? And what they're seeing is the earnings is actually going to be kind of break even, right? They're having it at break even. But if you look at last quarter, they had it at lower than break even, just like this year. So unchanged. You can see unchanged from last year. So these dumb institutional investors, they look at these, they look at this, guys, right? And they analyze and they're like, well, okay, well, I don't think it's going to be profitable. And then they look at the annual estimates. Let me zoom out a little bit here. They look at the annual estimates, right? And they see that this year it's pretty much not going to be profitable. And the next year it's not going to be profitable. Again, this is all manipulated by the analysts. Analysts, again, there's not a lot of analysts covering this stock in 2025. It's only one. And there's some manipulated data in 2027. So one of the analysts in 2027 has manipulated the data to show a high range of an EPS of $1.80 and a low range of an EPS of a negative $1.50. And that's when I started calculating my own earnings per share. And that's why I said that these folks probably started to, essentially these folks probably started to, were shocked that I could actually calculate earnings per share. It's actually a lot easier than doing everything that I've done. But again, these folks don't really have. I used to I used to teach a lot of these business folks in the MBA, so they're not really the brightest. And no offense to all the business folks that are watching. I'm just go look at the grades of a pre-med and go look at the grades of business major, right? You'll find the difference, right? So the point that I'm saying here is there's some manipulation going on in the earnings per share. This is aberrant. The problem is dumb institutions are looking at this and they're like, oh, this is what's being forecasted. But you guys know that that's not true. Last year, they were actually profitable by 7 million, right? 7.4. So what I'm going to do right now is I'm going to pull up my estimation that I did from 3 months ago. If I could freaking find it. Yeah, here it is. So this is my estimation. And we could just kind of zoom in a little bit on here so we could kind of see what's going on. So remember we worked on this and we did a lot of math here, right? Remember that? And we projected out all the free cash flow and the change and all this. Well, the big thing is right now we're in Q2. And utilizing what we know, we went ahead and did the data. And it's looking like Q2, they're about to make 37 million. Now it's tough. Okay. It's tough because I'm going to give you a range, kind of what I think is going to happen, but let me just give you a range. So if you take 37 million divided by 505, that's about 7 pennies. That's around 7 cents of earnings. So I would say Clover, if I was to guess what their earnings is going to be, I think their earnings is going to be anywhere between 2 cents to 7 cents. So that's anywhere between was that 50,000, 500,000, 50 million, 505? Is that 505 million on average?
50 million, 500,000.
I think we need another one. About 10 million.
10 million, 100,000.
Okay. So that's fine. 10 million to 37 million. I think Q2 2025 is going to make anywhere between 10 million to 37 million. Again, I give it a range because you have the kind of the standard deviation. I'm kind of going 2 standard deviations out and I'm really putting a range. Anything below 2 is sadly bad, right? Anything above, I would say anything honestly below 3, but anything below 2 is bad. Anything above 5 is completely bullish, right? So, so there's that, okay? So now that we kind of understand the range of what could be the potential for Clover Health, we could look at obviously Q3. We think Q3 is going to be profitable, and we think Q4 might be only profitable maybe by 2 million, if not maybe a little negative. But again, Q4 is a hodgepodge, very hard, right? But definitely fair game. Q2 is going to be profitable. Q3, I have a strong faith. Q4, questionable. Okay. But regardless, if Q2 has a higher profitability than a lot of the other quarters, because Q1 was break even, I think that this year they are going to be profitable. I really think, and they reported something different this year. They started talking about adjusted net income. Again, you guys need to be smart. You guys need to be attentive to detail, right? If you guys go ahead and look at investor relations, I spelled that wrong here, but it'll point me in the right direction. If you guys look at investor relations and if you guys look at their earnings report, for the first time ever, they've talked about adjusted EBITDA, but all of a sudden they're talking about adjusted net income. Why are they talking about adjusted net? Why are they mentioning this now? Why are they mentioning this word now, right? There's something about to happen this year, and I think it's because they're going to be profitable, okay? So that's kind of where we're at now. Likewise, there's a couple of things that I want to talk about as well. Shout out to our members in the lifetime access. I'm only doing this now because, again, there's an opportunity here, and there's going to be people out there that are going to be watching this in 5 years from now. It is what it is. Sorry, you're too late, right? But it'll be important for them to see this because this is pretty data driven. So shout out to B-Rob. Again, very hard for me to find all this because there's a lot of due diligence today. We have due diligence every day. I'm searching through the stock terminal channel here to see kind of where we're at, but we had 2 verifications here. Shout out to B-Rad and shout out to Belize. I just need a moment. I'm scrolling. He made for lifetime access members. He made a video. You guys should watch it. I haven't watched it yet. I need to watch it. So based off of what this is a screenshot here. Based off of what B-Rad was cooking, he found that we are on track to almost grow 39% in revenue growth by the end of the year. So again, we don't know this yet, but we're on track for it because it seems as we're going to continue to keep growing. And the reason why that's important is because they told us that we're only going to grow 37%. Okay. Now, why am I shifting? I'm going to go back to the short interest right now, but there's a reason why I'm shifting here, right? I'm trying to set, again, you guys, when you build a house, you got to make sure you have a good base. I'm trying to set the base right now. Okay. So we went ahead and then had, in terms of verification, we then have our sniper Belize come in, and he went ahead and further corroborated the due diligence, right? So it seems as we're going to be beating in revenue, and I think we're also going to be beating in EBITDA. They're going to revise upwards, I think, in Q2. I am so sure of it, So I think that's what we're going to be looking at, right? Okay. So now that we understand this and we have an understanding of how dumb institutional investors are going to be looking at this, what I want to now do is just kind of flip back to this data here, because this data is actually very interesting. Okay. So if you look at the Ortex estimation, its estimation high range is actually a lot higher. And just so you guys know, the last big short squeeze was right here, right? So pretty interesting to say the least. Now, again, I am more of a table person. You guys can see this. So let's just kind of remove this. And now let's just activate the table. If you look at the table and you look at and let me see if I can zoom in a bit here. Can we zoom in here? No, it doesn't really do much. Okay, that's fine. That's fine. If we can look at this here, this is the share short. This is the most recent. It's 42 million. Okay. Now, when was the last time we had 42 million? So let's scroll down. Right around here. So right around here, May of 2024. Again, we have a lot of folks that have amnesia. So not to worry. We will go ahead and open up a new little thing here, and we will move here, and we will look at CLOV when it was in May 2024. In May 2024, Clover was around 60 cents, right? It's hard to see it here, but it was a lot lower than 64 cents. So, and again, a lot of people are saying, don't talk about Clover at 60. Again, don't watch the video. There's a lot of weird folks out there that are telling me how to make a YouTube channel. For folks that are watching right now that are saying this, do not watch my research, right? Don't subscribe. I mean, right? I mean, I'm going to talk about what I see is the best way of communicating this, and there's just a lot. I mean, like I just, oh my god, you guys, if you go control your own wives, right? Don't come at me. You know, I'm not your wife, right? So, all right, you know, I'm not your wife, right? All right, so all right, so you know, that was the last time they had short interest at 45 million, right? So right here, right? So what happened? What happened? Well, let's exit this and let's now that we kind of understand this, let's kind of zoom this out now to May of 2024. And now let's clean up the data and let's clean up the data and let's put well, first off, hold on. This is a little bit of an issue here. You see, it needs to be restarted. It's a little bug they have here. So hold on, hold on. Little tiny bug, no worries. So now, because now when I remove this, then it can remove this little green. It wasn't removing the green. Don't know why. And honestly don't care. All right. So now let's go ahead and let's move it to May 2020. When was it 60 cents? Right there. Right around here. Okay. So that's good. So you be the analyzer. The last time, and again, we cannot look at the past short interest because the past did not have free cash flow. Okay. 2024 was, I told you, the year of the proof of concept. We got to use that data because 2024 onwards is going to be reliable because the company is going to be profitable. They were profitable in Q2. The company's free cash flow positive on a fiscal adjusted year basis. And, let me explain because I have the numbers in my head. People don't. It's fine. You can look at it. Net income in all the other years was almost negative $500 million, over negative $250 million, negative 339 million, negative 213 million. 2024 is finally when they really dropped it, right? And then their gross margins increased by a lot. And then another thing is their free cash flow finally turned positive in the company's history. So it's very clear that you can argue that it's doing really well. Now, again, what I want to also pay attention to is look at the gross margins. In Q1, they went from 23.57 to 23.55. Again, not that much of a change, even though they increased revenue by 37%. Now, look at the gross margins for Q2. I'm going to be watching this. The gross margin was actually 30.29%. That is freaking insane. Okay. That is crazy. Okay. 30% margins is insane. And if they can replicate that in other quarters, that's crazy. And then Q4 also had insane margins of 27.87%. Really, Q1 and Q3, we'll see how they do this year. Okay. The point is the game has changed. If you look at the AI summary, operating cash flow and free cash flow turned positive in 2024. So that's why we're looking at this data from 2024 and onwards. And what you see is when you have a big increase in short interest, the stock price rallied 600%. The stock price rallied 600%. Okay. So now what we're seeing is we're seeing it go up. And whatever must go up ultimately it has to end up coming down, right? So the question is, once it starts coming down, how much is the stock price going to rally? Okay. Now we could do the same math, but let's just kind of look here. It rallied all the way up to 653%. Okay. So if we go ahead and open up Chat GPT here, and if we go ahead and say, or I'll just do this here. If I have $3 and it goes up by 653%, what would the number be? And if we do that, it'll do some math quickly, right? And it'll end up being $22.59. So that's fair, but let's say it won't be 653. Let's just say it'll be half. Okay, well, half of $22.59 is $11.29. Half of that is $5.64, which if you go back here and go on the weekly, it is right in line. Oh, wait, we're in Apple. Sorry. It is right in line with a high price target right around this area. Now, again, it's tough to say because we're literally dropping it by multiple halves. Because I said, $5.70, 60 cents. So what would be the percent increase for $5.64? It's only 88%. I don't think it. I think if anything, it'll probably maybe be half of 653%, which I think would probably. So if we do that, let's say 300%. So what's 300% increase of 3? Right, $12, which is kind of what we said in the beginning. We'll just half. We'll half 22. You get around 12. Again, difficult, right? So we could go ahead and just basically, showcase this and just go tell it the story, to see kind of what it says. But let me show what I mean. We can say here. So there's a stock called Clover Health, ticker symbol CLOV. In May 2024, went from 60 cents to $4.80, which was around a 653% gain. That's when essentially short interest spiked up to 45 million, and then they covered all the way down. Now what's happening is short interest is spiking back up to 45 million, but this time the stock price is at $3. Given this analysis, what do you think could project the increase if it follows the same pattern? Do you think it'll be 653% again, or probably be a lot less given the stock price is a lot higher? It's not 60 cents anymore. Just a few FYI on here. 2024 is when it basically exploded from 60 cents to over $4. And that was because it was free cash flow positive on a fiscal adjusted 2024 year basis for the first time in the company's history. Likewise, Q2 2024 is profitable. It may seem as 2025 may end up being profitable, but definitely 2026 will be profitable. And they're growing now 37% versus last year, they're growing around 9.33%. Now that you have all this data, what do you think? I want you to think, please. So let's see. So it's saying unlikely it'll do this. A more reasonable projection is anywhere between 100 to 200%, which is quite interesting because it shows you $3, $6, and $9. Okay. Which I find interesting Because if you go ahead and go back to our stock terminal here, our chat group here of lifetime access members, BRAD ended up doing the same analysis. And he said this. I'll be watching $3, $6, $9, and $13. Again, it seems likely. Now, here's the thing, okay? There are a couple things that we need to talk about, okay? In terms of the short interest, okay? There's a couple things that need to be discussed. What happens if they grow more than what we expect? We already said that BRAD was thinking maybe 39%, right? What happens if, again, there's so many possibilities, right? What happens if they talk about Humana, right? And they release that, right? What I'm trying to basically tell you right now is intrinsic value calculation graph. This goes back to what I was talking about from, day one of our channel, right? If we go to intrinsic value, right, there will be a point where we will be trading above intrinsic value, okay? Now, I'm going to have to do some magic here, and I got to figure out kind of what could be the intrinsic value. It's tough. But I think Clover will be growing 37% on average from here on out. We could be humble. We could say 30%, right? And if we do the math, and if we say, well, they got 83 million last year, forget the 47 million, add another 43 million because of there were negative 43 million last year, subtract 19 million, let's say another million, subtract 20 million of unpaid claims. Clover break even has a free cash flow of 106. Okay. Now assume, let's say one analyst projected Clover at around 11 cents of earnings. Well, if we do that and we multiply it by 505 million, that's 55 million. Obviously, I think Clover is going to grow a lot more than that, but let's add 55 million to get the overall base that I think is going to happen. $161 million in free cash flow. And that's with a profitable year. I think we might see that in 2026. Okay. Definitely in 2027. So if we go to our intrinsic value, open up our classics view, as you can see, this is very like Apple-like, extremely just, again, all part of lifetime access, right? Let me just go here. There, that's a lot better. Let's go ahead and redo that again. Clove. And let's look up the classics view, right? Now we have the classics view. Okay. Now, what do we say? We said 160 something, right? 161 million. 161. So if we go 161, now the highest that we could see is let's say 37%. If that's the case, this is just Medicare Advantage. This has nothing to do with SaaS. $10 all the way to $49. Let's be humble. Let's say 30%. Okay. $7 to $30. Okay. Which goes and falls right in line with their incentive bonus plan. Okay. So now that I know that, this is the height of what Clover could be, this is without Counterpart Health. This is without Counterpart. And I already know the CEO is pretty non-splashy, right? So the reason why I'm saying this is if the intrinsic value in 2026 and 2027 is going to end up being anywhere between $7 to $30, $7 to $30, where I'm estimating $161 million in free cash flow. Now, before people tell me before people tell me, hey, Al, that's too much. I don't think free cash flow is going to double like that. Well, just look at the enhanced AI analysis. Look at free cash flow here. Free cash flow went up 128%. Then it went up another 44%, right? Then, so yes, it can. Yes, you can. Yes, it can go up this much, right? So I have no doubt, right? So, and it makes sense if you actually break down the statement of free cash flow, which I probably believe only 10% of people that are watching this video understand how to do, right? Which is unfortunate, right? It's why the rich always stay rich, right? Which is why I'm showcasing this. And because the thing is, once again, guys, there's going to be a time where I'm going to be limiting the videos, right? I'm doing this as a case project because, again, I'm seeing how this thing is being manipulated. I mean, this thing is literally dropping. I mean, just look. Do you really think this is a normal drop? Does this look normal to you? Spike in volume. Does that look normal? So, anywho, like I said, spike in volume and it ran up. The stock ran up. Then you're having the short interest, and then you have Q2, which is right here, which so happens to end in our descending triangle. And I said that we need to test the white line here. Is it going to stay above the white line? And it looks like it is. In fact, there's many layers of support now here, right? So we'll see if this is and I think this is going to start tracking upwards like so, right? So we will be tracking upwards like so, right? And then we'll see kind of how we go from here. And we just got to break out of that 16, and then the next one is going to be up here as well, which we'll follow. But the big thing here is short interest is increasing. The last time it went up this much and then it fell, the stock went up 600%. So again, and it's right around the same timeline, same playbook of what's happening right now. Okay. So just letting you know, a year ago, and just so for folks that don't understand, there's a lot of retail investors that are short. They're very they're just short minded. They're emotional, and honestly, they should not be in Wall Street, in my opinion, because I don't think this is good for their health. Right. So a year, a 93% increase, right? So we're still like that is a lot, right? And we are seeing there is a consolidation here, right? Now, when someone comments on Clover, there was a retail dumb money regarding the interoperability discussion on LinkedIn, saying that it's staying forever at $3. What about here, dude? Wasn't it like below $1 a year? Right. So now people's low is around $3, right? 250 to 3. So that you could see like this is a stepwise position. And if we look at here, we could start seeing really more here. You could start, if you zoom in, you could start seeing it creep back up now. Right. So we'll see what ends up happening. But I think that we are Q2 is going to be the match, I think. Right. And if it's not that, then we're going to have to, it'll most likely be fiscal year of 2025. And I do think they're going to revise earnings upwards in terms of EBITDA, right? So there's a lot to look forward to. So now that we went ahead and talked a lot about that, now let's exit this, right? And let's take a look at Carvana, right? This is a good case study, right? I'm curious. I haven't looked at it before. I'm assuming it's going to be the same, but again, I don't know. I don't know. So let's see. Let's just clean this garbage up. Let's zoom out. Okay, yeah. There it is. As predicted. Okay, so Carvana, this is great education, guys. This is wonderful education. Okay, so let's go ahead and let's open up this. So if we open up Carvana here, and if we zoom out, we could see in their AI summary, Carvana was operating cash flow positive for the first time ever in 2023 free cash flow positive for the first time ever in 2023, and net income positive for the first time ever in 2023. So 2023, it achieved a triple dragon status. Okay. Triple dragon was achieved in 2023. Okay. Now, if we were to look at the price and open up here, in 2023, it was trading at $4, probably even lower. Who knows? Yeah, $4. In 2023, Carvana was trading at $4. Okay. And then it went all the way up to about 8,500%, to a point where what's his name? Hindenburg wrote a letter, and then they end up closing shop. Good riddance, right? RIP. It went up 8,500%. So it went from $4 to $300. I mean, you see the price, right? You guys are not blind, okay? In the same time, this was 2023. This was 2023 right here. You can see the number here, right? The price dropped, and then short interest went up, right? And as whatever comes up must come down. Short interest started dropping because the short started to cover, the stock price exploded. Why did the stock price start exploding? So now let me go ahead and ask you, because it's very clear that retail investors tend to undervalue their brain. They tend to look at their brain as inferior to institutional investors. Well, I'm here to basically tell you that if you have access to data, you can actually be better than institutions, right? Because a lot of these dumbass interns do these trades, okay? So the point here is what happened in 2023. Okay, so you can look now. Let's open up the quarterly, right? Let's look at free cash flow. Here's 2023. Q1 negative 98. Q2 $49 freaking million. Q3 $580 million. Q4 negative 257. Altogether positive for the first time. Okay. Like I said, the triple dragon, yes, it was positive on a fiscal year basis and total, but they needed to be consecutive. That's why the stock price took time. It exploded maybe, it did a little explosion, like around 600%, just like Clover, 600%. But then they continued to being free cash flow positive, and then it did another explosion, right? So it's like a double load, right? And then it did it like 4 or 5 loads, right? Okay. So now that you see this, okay. So you have this, okay? What else? Okay, going back to the fundamentals. Look at net income, right? Net income, right? Q1, Q2 negative, but Q3 almost $1 billion in profitability, which basically shaped up the whole thing, right? Then they've been profitable ever since. So triple dragon continued for all 4 quarters, and now even on the first quarter of 2025, right? So I don't know what Hindenburg is saying. Hindenburg is stupid, right? And you could see, right? So there it is, right? So now that we understand this, what I'm going to do now is let's go ahead and let's take a screenshot of Carvana and let's screw 2024. I'm not going to show you 2024. I'm just going to take a screenshot for 2023, okay? We're going to do a case study, okay? So here's 2023 data. And what I'm going to do is I'm going to pair this up to the intrinsic value. I'm going to bring the intrinsic value here. And I'm going to type in CVNA, right? We're going to type in CVNA, right? Forget all this data that you see here. We're going to go ahead and we're going to use the data that we have from here. So we can look at ultimately the revenue. And again, I don't know 2024. I don't know what's going on in 2024, right? But ultimately, I can look at the history of Carvana. I can see kind of when it started trading. It started trading in 2017, okay? So I can say, all right, well, 2017, we have data. This is pretty insane. I would say I would start counting maybe around 2020, right? 2020 is probably good, right? So then what I like to do is I like to do CAGR calculation. So to do a CAGR calculation, all you got to do is you just got to go ahead and take this in 2023 and then compare it to 2020. 5,586.56. Whoopsies. And then you get around a CAGR of 24%, right? So you get a CAGR of 24%, and then 2023, we could do 5% of whatever this is, 10,000, right?
10,771.
We'll do our base 5% because it's still negative. That's about 5389. Sorry, 538. And you can see that eventually they actually ended up higher at 716. That's why I said 5% is pretty low, right? But we're going to basically do our 538, right? Because we're halfway in 2023. Oh, you see how her AI does it automatically? Look at that, right? Nice. Excellent. And then 25%. We said, what do we say? 24.46%. You see how the calculation is pretty damn good?
24.45%.
So we have that. And then shares outstanding, we got to be careful. We got to make sure the shares is the same. So 109.32.
109.32.
So we'll just got to go ahead and do that, right? 109.32. Is this it? Is this it? Am I right? Okay. So then we could go ahead and hit enter. We go ahead and hit enter. We calculate the value, and we see that by then the stock wasn't trading at $300. It was trading at $4, right? So as you can see, we have a 1,000% return, a 2,000% return, a 2,900% return, and a 4,300% return. So this is what the intrinsic value is basically saying. 178, right? Although, so if I was to make a video back then and I said, hey, Carvana is $4, but it's going to end up being $178, people are going to, hey, man, you're full of crap, right? You go shut up, right? They're not going to believe me, right? And I get it, right? It is what it is, right? But if you go here, well, look what happened. The stock price went up, right? And then it keeps going up higher. And I get it why Hindenburg probably slapped it because it, with the Hindenburg thing, it probably was like, hey, it's doubled intrinsic value, right? And this is where I was talking to you guys about the graph, the intrinsic value. It started trading up here, when in reality, the intrinsic value is here at 150, right? So you can see now how we've just combined intrinsic. We just combined fundamental analysis. We combined the AI summary for Carvana. We went ahead then and calculated the intrinsic value. And then we went ahead and said, hey, the short interest was really high up here, which is right there, right? The short interest was really high. Okay. And then it started to fall. And then this thing started to basically go. And what are the similarities can you find? Well, I can tell you a couple similarities. We got, free cash flow positivity, operational cash flow positivity, and net income positivity in 2023. And that was really highly shorted for Carvana. But what's going on with Clover? Well, they're operational cash flow positive and they're free cash flow positive, but they're net income negative. They are a double dragon. They are not a triple dragon. I think they are about to become a triple dragon either this year or next year. It could be this year, but it needs to be 4 fiscal quarters and 4 quarters. And then most likely 2026 and 2027, we're going to get that double, triple load coming in. Okay. Again, this is all data. Everything I'm telling you is all like, if you play me in chess, you will lose because every move I make is backed by hundreds of thousands of data points. I mean, everything I do is all data. I win, right? It's all data, right? I'm not moving any opinions here, right? Right? It's all data. Everything's data driven. Okay. Right. Oh man, you guys are making fun of my. I knew. Al seems like to like these. I had a little hiccup there. Sorry. Dude, you're on fire. Yeah, no, yeah. You can see this. Isn't this nice? Right. And then what's the short volume here? The short is 55 million. What is Clover right now? 42 million. I mean, are you starting to see the parallels, guys? I mean, come on now, right? Okay. All right. So then now let's again, it's different though because I'm curious, what was the actual 2023? Hold on. Let's open up this table here. What was the percent short here actually? Because we got to be careful. We can't just make apples to apples comparisons here because the outstanding shares was a lot lower. So I retract my comment regarding the shares of 45 million equating to 45 million of Clover because this was actually a lot higher, around 40% of the float, right? But it did start to creep up, and that's what I'm seeing with Clover. Now again, I think these folks are stupid. I think Clover's a dangerous short because One, you have me basically coming online and teaching about intrinsic value, and I think it's very dangerous. And two, I have millions of dollars invested in Clover, and three, other people have a lot of money as well. So I mean, I would say that's pretty damn dangerous. Honestly, I shouldn't even call it a triple dragon. I should just call it the triple load. Honestly, right? I think that's going to be a lot more educational, right? But okay. So what's another one? I mean, I haven't looked at this before. Again, guys, I'm not big on shorts and all this other stuff. It's not my cup of tea, but I will just see here. I'm curious, what does Palantir look like, honestly? So let's just remove this garbage here and let's focus on this. Let's zoom out. Yeah, same thing, right? Same thing. I mean, guys, Wall Street, these people are stupid, okay? For all the doctor, I mean, the Mr. Nephrologist, you're there, my friend. How hard is the freaking kidney? I want to bash my head in the kidney. You know how hard the kidney is? It's like a freaking mini brain, right? I mean, come on, man. You could do the kidney. You can easily do this. I mean, how many lines are we looking at here? It's 2 freaking lines, right? I mean, think about it. This is your potassium, and this is and this is your glomerular filtration rate. There it is. There, boom, right there. Right. Here's your potassium. And here's the glomerular filtration rate. I mean, come on, it's very simple. Okay. All right. So now let's go ahead and let's open up Palantir here. Okay. So let's see what's going on with Palantir. Okay. Again, Palantir operating cash flow turned positive for the first time ever in 2021. Free cash flow for the first time ever turned positive in 2021. Guess what? 2 years later, net income turned positive in 2023. Now, what happened here? Look at that. Ooh la la. 2023 is over here. Short volume was high. Alex Karp was saying, I'm going to bash the shorts with cocaine and whatever the hell this man was saying, right? And then all of a sudden, he said that, something like that, right? And then what happened? Well, the stock became profitable. Remember, and the stock shot up from 6 to 7. We called it out at around 6, 7. Like, hey, this thing's a buy, right? And then it basically continued shooting up. And what did they do? Short started to cover, and they started to get back online. But guess what? The stock continued to go up. Institutions came in, and the short started to cover even more. So, there it is. I mean, you see it, MD, man, right? It makes sense, right? I mean, come on, right? There's your potassium, and there's your glomerular filtration. I mean, this is very easy. These people in Wall Street, they're stupid. I'm telling you, right? The only reason why they look smart is because they have the data, right? Once you have the same data, it's like you have your own bullet that's armor piercing, right? All the bullshit they throw at you, it doesn't stick because you know what you hold, right? Oh, yeah, SoFi? Oh, yeah, let's do SoFi. Okay, let's see. SoFi is a little tricky. Banks are a little tricky, but let's see. Let's see what's going on with SoFi. Let's see. SoFi, BoFi, what's going on with you, my friend? Let's see. Let's zoom on here. Let's remove all the garbage. Okay, SoFi, BoFi. Okay, so yeah. You see? Short volume went up, stock go down, and then all of a sudden stock go up, and then this thing's trying to basically creep back up. So again, yeah, SoFi is a little different because it's still negative free cash flow. It's profitable now, but net income, but free cash flow is still negative, right? So it's still negative, just profitable for the first time, but it's still negative, right? It needs more help, right? It's not ready. Of course I saw MP hit $50. If you guys don't recall, here, let me show you here. MP stock, rare metal earths. It hit good stuff. And then if you go YouTube and if you go MP stock next 10 bagger, I don't know, it's called next 10 bagger. There it is, my friends. There it is. The next 10x stock. Buy Al Stock Trades. Right, so you're going to start seeing this go up even higher, okay? But anywho, there is that. Again, the analysis are unmatched. Okay, so what else? What else can we talk about? Come on, let me think. What else is a good company that went positive? Let me think. I got to think. This one's a little tricky because of the whole, it's down on its knees now, but there was a time when it went from 70 cents to $300. So we can We could take the thing is with Open though. Open is a little bit. Yeah, Carvana was a solid illustration. Data low layover, but probably Peep saying so. Yeah, 100%. Carvana was perfect. I mean, I don't think I can beat Carvana's illustration. That was kind of crystal clear. Pretty good. This what is this one again? I just what the hell did I put? Oh, Enphase. Yeah, Enphase. I'm like, what the hell am I watching? Let's just go ahead and remove all this noise here. And let's show you here. Okay, so they don't give you the historic data, but you can see it here. Watch, you can see it here. Look, 2018. So okay, this is also a perfect illustration. And this is a perfect illustration. Okay, are you ready for this? This is good. This is gonna be another Carvana. All right, sorry. Here's Enphase, right? So look at the AI summary, right? Operating cash flow turned positive for the first time in 2018. Free cash flow turned positive for the first time in 2018. So in 2018, it was a double load, right? So it was a double dragon, right? So what happened in 2018, right? Short volume was high. This is 2018. The stock was trading at 70 cents. And all of a sudden, it became a double load. And then it basically started going up. And then they started to short it again, right? And then it basically trickled back down. But watch. In 2019, it became a triple load, right? It became a triple. It became a triple dragon, right? So what happened in 2019 once it became a triple dragon? The stock pretty much exploded. It went from 70 cents all the way up to 200, 300. And what happened to the shorts? The shorts ran away like little girls, right? But guess what? The shorts came back online now, right? And the stock is dropping. The problem now is the shorts have a reason because look at free cash flow. Free cash flow for Enphase went from 698 million to 480 million, and it's on a downtrend. If you were to graph free cash flow right now, it's on a downtrend. So you need to go to the earnings report to see how are they going to solve this problem, and also look at net income. Net income went from 397, 438 to 102. So the shorts are actually in the right here, right? So the question is Enphase about to become unprofitable again, given what's going on? So that's why I agree with this short. You see how amazing this is now? When you actually, and this is what basically Dish was saying, even though I refuse to short, because again, it's just, I don't have experience in it, right? And I'm doing medicine now, so I can't gain that experience. But you can look at this data and then look at the intrinsic value, and you could basically say, oh, this is a good short, and you can basically make a killing. Okay, you can make an acorn dish soup killing. Okay. Again, yeah, that was when I was up here, not down here, right? But they're loving it, right? They're thinking they can go lower, right? So now that you basically, the big illustration here was this, from 70 cents all the way up to 300, and you could see the game play out here. Okay, so now given now that you guys have this data, you have this now, these exercise tools in your mind. Now let's go ahead and let's open up the same graph now, and let's look at the same graph, and let's kind of clean up the crap here. And now let's go ahead and zoom out. So now you're starting to see what I'm talking. That's why I said here, it doesn't matter. The shorts were correct here because technically it was still unprofitable, right? But now here, this is where they're incorrect. Free cash flow positive. The shorts went ahead and ran away. They ran away quick. Why? Because this stock has a history of short squeezing, right? Now, guess what? They're hitting it hard and it's going up again. And then Q2, I think, is going to be profitable. And you know what's funny? Clover Health is not updating. This is what's so funny. Clover Health didn't update their EBITDA and adjusted net income. They didn't revise it upwards, which I find really weird. I think they're going to revise it upwards in Q2. They're going to have to, right? If not, it's going to be very funny because I think they're waiting for the trifecta effect. They're waiting for them to announce full year profitability, probably a subdomain analysis of counterpart with Humana, and they're waiting for that triple trifecta phase to just maybe Q3, Q4, who knows? I don't know. And then that right there is going to basically shoot the stock up to the moon to a point where it will be in the range of around $20 to $30 for 90 consecutive days for them to get their bonuses. I think that's what they're waiting for, right? Again, my apologies for kind of like the bad start of the video coming in because of the microphone, but I just wanted, this is a very important video because there's a lot of research here. I remember Brabdo was saying He wasn't looking at the data. Well, I mean, I hope, Rabdo, you see what I'm saying. You see how I'm tying everything together. That's why I like videos, man, because videos are a lot easier than just a bunch of stable tweets. It's kind of hard, but that's the whole point of the video here. And we're going to be taking these videos, right? We're going to be internalizing them in our lives, internal, not on YouTube, because I want us to have an edge, right? And yeah, so folks, very quickly, I've gotten a lot of messages in regards to lifetime access. I got a lot of folks saying, "Hey, Al, can you please, I would love a sale. Especially for folks that are overseas, they pay a lot of taxes on our platform, which is unfortunate. There's like a VAT tax, which I have to comply with. This is automatic. I don't have to do any, this is all automatically done. So what I'm going to do now is, in the end of the video, in the next hour or so, I'm going to be reactivating the SaaS coupon code, right? I'm going to be reactivating the SaaS coupon code, and you'll be able to get $1,200 off lifetime access, which is, I would say, a really good deal. We will be increasing prices on the latter half of this year, and prices will be going up. So again, this is in lifetime access, right? So you guys know the due diligence that we do, and we, I think the research and data speak for itself. Okay, so we talked about this, and then what else? Oh, another thing that's funny is, look at smart money here. Remember when the stock price was going down and everyone was basically flipping out? Smart money was taking advantage, and then dumb money was like, oh, you know what I mean? And then now the stock price is back up, V-shaped recovery, dumb money, and then look at smart money. Yeah, guys, it's just a pattern. It's a pattern of, from smart to stupid. All right, let's go ahead and surgery. What are you talking about? Got to do the terminal and do the work, due diligence, multiples in terminal. No, 100%. There's a lot of good stuff, guys, and in the terminal, there's a lot of good stuff, right? Yeah, I think the Carvana illustration was pretty solid. That's going to be a pretty good textbook, guys. Pretty good one there. And then there's going to be folks that don't believe it, and it is what it is. Now, here's the thing. Here's Schwab, just very quickly. Schwab said underperform, and I just find it funny because if you look at Schwab here, they say it's underperformed, but they've been buying up their investments here. They've been buying up, and the argument was, well, this is all automatically done. The person responsible for this, it's not responsible for the institution. I get that. That's fine. That's a solid argument. But the problem is don't you think there should be some cross collaboration? Why are they? Who are they giving this to? They're giving this to retail investors. They're not going to give this crap to institutions, right? So all I'm basically pointing out here, guys, is that you have somebody that's telling you to sell, but if you look at Charles Schwab, they're actually buying. They're actually buying the dip, right? They have on average about 5.3 million shares invested in Clover. They got about 5.3 million shares, and they're telling retail investors to sell. I mean, again, I get it. Two different things. You guys are optimistic to think that these two entities don't talk to each other. I mean, you guys really have to be optimistic for that. I mean, you guys are really that optimistic to think that? I wish I can believe a world like yourselves, right? Because another thing that I find that's bullshit is, if you guys think this is kind of the day-to-day analysis, well, look at earnings per share. Where the hell did they get -3 cents? Where the hell did they get -3 cents for Q2 estimation? What in God's name did they get 20? Dude, not even last year. Last year was +1 penny. How in the world are they getting -3 pennies? I'm going to be very surprised if they're not profitable in Q2. I will be very, and then I will say, Charles Schwab, I will go down on my knees for you. You are correct. But in the hell are we going to get -3 cents earnings? That is just complete baloney. So I don't know where the hell they're getting this 3 cents. And they're saying the number of analysts is 4. Where? How is the number of analysts 4? Right? Because remember, I got access to the internals of Wall Street. I got access to their guts. Okay. And what my internals are saying is we only have, fine, let's do quarterly. Let's do from gut to gut, right? We only have one analyst right now covering Clover from a quarterly perspective. How in the world are these folks getting 4 analysts here? Okay. Now here's another one here. You can go to CLOV again. We go out longer. We could go to here. We could look at the analyst from here, and you guys can basically see for yourself. We go to analysis here, and then we could look at the analyst here. One analyst, guys. One freaking analyst, right? So and then here's the revenue estimates here for 4, but the earnings estimates is 1. So why are they saying that the earnings? So again, so for folks that, so they can understand here, this is earnings estimates for analysts, right? In terms of revenue estimates, yes, I agree. There is 4. There is 4. But for earnings, there is not. You see how if you look at the data and actually pick the data out, they're bullshitting you. They're 4 analysts are saying this. No, that's bullshit. This is wrong. Okay. And again, I get it. They know that retail investors are hardworking folks that are working 9 to 5s, probably double shifts. They don't have time to actually look in the data and have the confidence in basically being able to trash this report, right? This is what happens when you've been in the market for over 14 years. You can look at something and break it down from its mechanics and say, this is a complete botch of shit. Okay. So, okay, what else? Let me just kind of look at all this here. This is just, they're sourcing this from Refinitiv. It's not even their own data. What a joke. And this is Reuters, so they can blame other people. Gross margins. They don't even show you. They don't even want to show you the gross margins for Clover. They don't want to show you because the gross margins for Clover, we have access to the data. I've showed you the data. The gross margins are impressive. And even Vivek talked about them. Rating not available. I wonder why. This is the environmental social government's ESG rating, the most like criminal thing that you can even think of. This is who the hell looks at this. Okay, what else? Let's see. Yeah, this is correct. You can't fake revenue, that's for sure. You can't fake that because they told you this. Okay. So this is what they forecast. They forecast it being negative 12 pennies. Ah, what a joke. What a joke. There's only one analyst that forecasting. Oh my God, guys. This is just a joke. They have a page of what is this, guys? This is their rating. It's based on stock price. Because that's what retail wants. They want you to buy the stock when it's high so then they can short it down for you. I hope you're starting to see this, guys, right? This is why I tell you. This is why you need access to the data. This is why I'm telling you need all this data, right? I mean, good luck. I mean, enjoy your piece of shit here, right? It's free, isn't it, right? Because who the hell would want to buy this garbage? I'm sure there's dumbasses that probably would. But anyway, I digress. Okay, so let's go ahead. And, okay, so very quickly, Andrew Toy talks about pilot program for pharmacy, talks more about this regarding what's going on here. Guys, let me just cut the crap for you and give it to you straight, okay? There are 5 key changes for driving pharmacy value-based care. It is a big thing that's going to end up basically helping decrease expenses. There's a lot of CMS has integrated a lot of value-based care models into it. The Trump administration, you can see down here, is focusing more on trying to maintain costs, right? They're trying to, have cost savings, okay? The big thing is here, medication adherence measures help Medicare beneficiaries avoid up to $46.6 billion in healthcare costs. And the biggest thing is what is the impact of the three medication adherence measures used in the Medicare Part D star ratings program? Ladies and gentlemen, this whole thing has to deal with star ratings. Star ratings, okay? I do not know what that triangle is. The only triangle I know is the Bermuda Triangle and something that looks like a triangle. I think the inguinal triangle. That's the only triangles that I know, to be quite frankly honest with you, sir. Okay. I trade. Oh yeah, I trade on CS and look at that BS with my and laugh out loud. Exactly, Jeff. I mean, you see it. This is, and again, a long time ago, I would never have the opportunity to be able to get in front of your face and to show you this information because one, internet was not as fast. Two, the computer systems that we had never had. I mean, like I'm speaking to a microphone now. It's rushing straight to my computer, right? And it's rushing straight to the internet and it's rushing straight to your phone. And I'm doing it live. I mean, holy freaking A, guys. You think we had this technology 10 years ago? If we did, the computer had to be like $20,000, $30,000 worth, right? It was impossible to get this information out. And let alone, that's just to send you information to you, right? Let alone being able to get access to this data, right? All right. Let me go ahead and just read this comment real quick here.
If they don't get the stock awards for 90 days with the average price over $20, $25, and $30, I assume the board will roll them out another year or 2 years of improving company performance.
Absolutely. Absolutely. I think they are going to roll them out 100% if they don't meet them.
It would be pretty bizarre if they aren't profitable score. If you look at their net income, movements from 2023, 2024, 2025. Only Q1 trend they have filed for 9 quarters. Says plus $20 million.
Wait, what? Are you using our data? I don't see what you're saying there. My apologies. I could be tired and not like seeing it. Okay, we talked about. I'm trying to see. Yeah, we could talk about this, but that's fine. Yeah. So in the next hour, we will be reactivating our SaaS. Honestly, I did not want to do this, but I think in conjunction with all the emails I received, and also with the subdomain thing, I think it's going to be pretty good. Also, shout out, and also I just received another message here publicly from Tommy. Was it Tommy? I love your content. We'll be a member in 2 weeks after I close my house. Let me just comment. Really appreciate you. Of course. Of course. Of course. Tommy boy. Of course. Don't worry. I'm going to be reactivating. I've received a lot of emails, so it's just better to just do a blanket sale to be the most fair. So this will save you another $1,200. Congratulations on closing on the house! Exclamation point.
Of course, that's Tommy 327. Don't worry, I'm going to be reactivating the self-sale. I've received a lot of emails, so it's just better to just do a blanket sale. The most fair, so this will save you another $1,200. Congratulations on closing on the house.
There. All right, so there it is, guys. Okay, so holy crap, that was a crazy Friday live. Holy freaking moly. Let me think. Did I cover everything? Yeah, so I already covered the technical analysis here. So I think we're going to be trading here again. If not, I'll just keep lowering it, whatever, right? But I think this was a pretty damn good video. For folks that don't watch this video, it's going to be their loss. This is a very good video, guys. Incredible good video. I'm going to see if I can try to do some post modification editing here. So if you can get that 3-4 minutes of silence. But yeah, guys, that's all I have for you. Appreciate you all. God bless you all. And I will see you on the next one. Let's go.